Hey, welcome to Apex Trades. Hope you're okay. So we're just going to get straight into it. Normally I don't like to trade till a bit later on, but we've seen some good volatility today. So I've just been kind of mapping out some ideas. I'm kind of waiting for a retracement at the moment. You know I do like my fibs. And what I'm looking for is for us to come back up and retest this golden pocket zone here. So just waiting to see where we are. I've currently got an order in around the 16762, so we're just waiting to see if we retest. I'll say we've had a nice sell-off. There's a few fair value gaps only on the 1 minute, but still we've had a nice sell-off to the downside. So just waiting to see how things play out a little bit. Over on the left hand side, obviously we've got our trusted book map. Shows us where liquidity is, where there's potential orders, and where there's a good potential of any kind of a reversal, let's just say. So very much bearish at the moment, but we shall see. Okay. Now look, I might be a bit silent on these things, and I've been testing the idea that it's not always good to talk. Sometimes it's just good to watch and let things play out. If these become something that people like, then I will continue to do them. If not, and I find myself constantly having to talk to make things kind of come across well, then yeah, I may decide that it's probably not something that I wanna keep doing. It's hard to kind of fill in the gaps sometimes with words and verbiage unless there's something to talk about. So if there's nothing to talk about, I'll be quite quiet. If there is things to talk about, I will kind of chime in and let you know what I'm thinking at the time. So that's where we are. Okay, let's see. So let me see if I can get up my Bybit platform. Yeah. I'll show you where we are on things like that. I've also got the comment section open as well, so if anyone's got any comments, feel free to drop them in and I shall be able to respond. Now, can I go to the web? I'm just gonna set this up real quick. Okay. Beautiful. Okay. So just so you know where we are, as I say, currently got an order at the 16762. If you remember, that is just where that golden pocket is. Now, in terms of confluence, it's not too bad. We have what was previously an order block, but we absolutely crashed back through that. So, an idea would be that we come back, retest. We always like to see the retest, and what we're hoping for is to catch that retest on the back. Now, this might just have a mind of its own and just want to completely, come off the blood, because usually, what we tend to see for market structure, Thursday's like the middle of the week. We're on Friday today. Where's my draw tool? Let me just see. Which one gives us the best draw tool? Sorry guys, I'm just trying to figure out which one to illustrate this best. Let's just go with this one. So you normally see, no, just let me figure that out. Which one gives us the, see what, let me have a look on my, there's that one, isn't it? Nope, it's not the arrow, is it? Yeah, so where's that come from? You see, no, 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 no. Is it this one? No. it wouldn't look very good if it don't do this properly. So let me just see if I can find which one it is, where it is. It's none of them. What the hell? Okay, let's just tell you what. Instead of doing it there, let me just do it somewhere else, right? So, what you normally find in typical structure, market structure on a weekly basis, so week starts, week finishes, and then weekends, and then we go into a new week. We normally find, let me just cut this across. We normally find that this is what I was trying to find, by the way. This arrow. So you typically find whether the market starts off bearish or bullish. Let's assume it starts off bullish. Like this week, it kind of started off bullish, so you have that kind of move. And then we come down and finish the week off. So you'd have that kind of up momentum, and then during the middle of the week, everyone wants to pay themselves, so then they build a short that come down. So it feels like that's exactly what's happened. We've had the kind of move to the upside at the start of the week, and now we're having this move to the downside. So right now, if we're looking at the charts, what are we currently looking at here? We are looking very much like we want to push down. I've took the liberty, by the way, of marking off some key areas. I'm just going to show you what I've done. So, nice vanilla chart. Let's just get rid of that too at the moment. Oh, you just saw that huge delta bubble here. Our next zone's there, but if I go into the 1 hour, I've marked out some kind of near-term zones. These would be supply zones, these will be demand zones. So I'm expecting this would be a nice range, yeah. So this would be a really nice range to just trade between, to and from, if you're just wanting to map out some key zones. And really all I'm doing is mapping out order blocks, so areas where we've seen a nice reversal and price really struggling to break through. And when you see this, if we bring up the volume, let's see, do we have volume? No. If we look at the volume here, this is a very telling sign. So when you see my tool again, when you see this kind of volume and you don't really see a push to the upside, then that's a bigger player absorbing the buys as limit orders. So you'll have big aggressive market orders pushing the price up, but realistically it can't go anywhere. Now we know that this 16,800 has been a really sticky zone for some time now, and when you see that absorption starting to occur and physically can't push past that price, then you normally see a big move to the downside, which is what we're starting to see right now. In our swing trade, so those who are in the server will know we also do, well, majority of the time we do swing trades. My kind of take profit zone is around here, so I'm waiting for the price to come down about here to take some profit on that. That would be a lovely trade. But in the meantime, we're just waiting to kind of see how the action goes. Now, as I see things at the moment, it looks like what time are we on now? 20 past 12. So we've got another couple of hours yet, really, before the markets really open up. Now, the question is, do we want to continue to drive down? We can map out the zones. I mean, right now, as I say, we're just in the middle of this trading move, so it's difficult to get into any trade at this stage, because realistically you're not coming from anything but a sign of strength. Because yes, we may decide that this could bounce, sorry, this could go right down. However, the only thing you've got to keep in mind is this zone here. You know, you've got a lot of consolidation around here. You've got a lot of consolidation around here. So you're going to find that if we do break through this zone, then I can see that we at least come down to this zone without any problems. But because we've got this consolidation, this would be what I would class as a volume profile area, maybe even a daily level. if I was to map that out, because I'm day trading, I'm not, you know, which is kind of in and out. I'm not really going to go right into that at this moment in time. But those who know what we tend to look at. So back to the 1 minute or the 15 minute. Right. So still not really seeing any movement, but as I say, I'd like to see at least a retracement back to here, because we haven't come back and tested, in my opinion. So we need a strong retracement, and as I say, that would be taking this high to this low. Let's just zoom in a little bit there on that 1 minute chart, and coming up to this zone here. It's a nice zone. I mean, you can see this is that golden pocket. If we line up things so it's nice and neat, so that is where the current price action is here. So we're going to mark that off here where the zone is. We've got our VWAP roughly about here, so let's just mark that off on the chart. What I'm doing is marking this line with this line here, so that tells me where the current VWAP is based upon, you know, where we are here. But I'd like, at least we can see we've come back and tested the 0.5 and we're moving down a bit. Now what I want to see is that we come back and test the golden pocket somewhere in this area. That's where we've got price ready to go. So I'm just going to show you that again. So yeah, just looking at this area here, which is that golden pocket area. This is obviously the trading the trading desk for us that we're using, Bybit. But like I say, this thing just wants to go. Just seen another huge market order come in there for off Bookmap. So this is where we are now. If I'm just going to go and change back to previous. Now, if I was looking at this here in terms of DCA, what would that look like? So, you know, as I say, I want us to come back here. That would be my first position. Now, would that invalidate any move? Well, not really. I mean, if we go back to the 15 minute, let's just get rid of that 1 second. You know what we're seeing, and this is the key thing that we want to see, is the market structure. So let's just draw that out, right? So we've got now. Why did that delete there? Let me just try that again. Sorry. From a market structure perspective, print that there. We print that here, there, here, there, here, and then down there, here. Oh, I'll tell you what. Let's just do it. I don't know why that's not playing the game. Let me just try that again. 1, 2. You can do these smaller ones here, by the way, up and down. But the problem is, you know, it gets a little bit too messy. But anyway, it's not a bad thing to just keep mapping out, and then wherever this wants to go. Okay. Now, what I'd say is, do we have higher highs, lower lows? So you can just say, okay, let's do this. Is our first, second. Let's put the magnitude on. Our third. Fourth. So you can see absolutely no breaking of structure at all. Right, now, problem for me, problem number one is this. These have all conformed nicely. You can see, you know, each one of these is higher than the previous structure, but the structure here, there's a big gap there. So for me, we have to come back up here to close this gap a little bit, which is why it's a good idea to have your order here. And if it doesn't get filled, it doesn't get filled. That's fine. At least we're not we're not at a loss. When would this move be invalidated? Well, really, if we take out this area here, then that would be invalidated, specifically on the 15-minute, right? So that would be where I would potentially think about setting a stop loss. So I'd maybe set my stop loss above the second structure, right? But then, I guess if we was to go out further, you could argue that realistically, let's get rid of it. So we'll keep these purple ones as the 15-minute, right? But we'll change the 1 hour to I don't know, let's say yellow, right? So the 1 hour higher lows really are here. So it's like, okay, well, when do we decide that structure has actually been broken? Because on the 15-minute, this would be the first one that you would determine that structure would be broken. But if you're trading on a higher time frame, like the hour time frame as an example, well, we'd have to come back and break this structure here, which is the yellow one. So it's all deterministic upon what time frame you're looking at, really. Now we're trading the 15-minute, so if we want to get in and out, well, really our time frame would probably be this purple one here. I'm just going to get rid of them because we can a lot of this you can do by eye. You don't need to have these lines on, so to speak. Okay, but you can see, I mean, right now we're just heading down, aren't we? And we haven't even had the brink session yet. The brink session is still an hour away. But here's what I will never do. I will never dive into a candle just because it's starting to look really juicy. And that's okay, because some people do and they can catch a good win. But if you understand anything about how the market maker likes to drive things, then what he will be doing is building his longs as the shorts are starting to fall, and then at the bottom here you'll get a huge institutional order block or something that will reverse that price. All of your kids who've been going retail mad on your shorts, blasting them in, will be in a position where either they got really tight stop losses because they don't know how to manage trades, or using 100x leverage like me, but I kind of have at least some sort of indication on knowing what I'm doing, and then they'll be getting liquidated quite easily. So you don't what you're always looking for is areas of value, right? So that's the key point. I mean, if anyone who knows me knows that I'm always talking about area of value. If it's not an area of value, it's a sign of weakness. You're coming from an area of weakness, effectively. So we wouldn't be diving into a short at this, even a snipe, an in and out. It's just too risky. Remember, I'm doing this with very small capital. I have $250 in the account, specifically because I want to use it 100x, and I want to just get something like a 50 basis point move. That would be a nice return on investment, done for the day, and then we compound that tomorrow or whenever, maybe Monday when we want to get back into the markets. That might $250 might be $500 or $400 or something like that, and then we keep applying the same kind of mentality. So as I say, we don't have to rush into these things. We can be patient. Now you can see over on Bookmap we have an awful lot of liquidity building at this 1660 level, which is here. Okay, now if we map that out on the chart, let's see if we've got anything interesting at this area, right? 1660. So let's take the magnet tool off. Real power of having, let's see. Well, apart from it being a whole number, there's obviously consolidation around that area. We can see here we had a bit of reaction to this earlier as well. I just don't think it's a strong support, if I'm honest, even though it's, you know, it was relatively strong here. If I'm honest, I think we are probably going to see some, you know, complete movement to the downside. When you see this, you can't see this, but when you see this kind of move, that details that it's really sharp. And we would expect some sort of reaction, but it's slowly working its way down. So, and I think this was all off the back of, if we remember, you know, back to the 1 hour. This high volume here, had this high volume, didn't see a reaction. If anything, we just absorbed it, and then, you know, inevitably you're gonna come down. So volume is always key. It's why I use things like the MFI, which is the money flow index, rather than the RSI, because RSI is just, you know, price action. It's just, if price starts to go up, so will the oscillator. However, low volume can make price go up. What it doesn't show is as soon as big players come into the game, if the price doesn't move, then that is a really good divergence indicator. So if you're getting a lot of volume pushing the price, trying to push the price, but you've got bigger players absorbing that volume through limit orders, and the price isn't really moving, well, the RSI won't move. So the RSI will stay at a static level because the price isn't moving. That's what it's looking for, price, you see. But with the MFI, because the volume is there, you'll see the volume start to pick up, even though the price isn't moving. That gives you a good indication as a trader that, you know, there's a bigger player in the field absorbing that liquidity. What normally happens is when you try to push the price up and you overexhaust a load of liquidity, well, overexhaustion occurs and then the price starts to revert back the opposite way. And I don't think sometimes the RSI catches them moves. So I like to use the MFI. I mean, I'm not too bothered about using it on kind of small time frames and day trading like now, but just as a bit of I know a lot of people like to use the RSI. I'm less a fan of the RSI and more a fan of the MFI, which is the money flow index. Think of it as a weighted RSI because volume is also incorporated. So still waiting for that retracement. So I'll just map that out here. So we have it. Let me go on to the one there. I don't think that was the right one, was it? Is it there? No. It's about there. This is the boring side of day trading as well. You know, it's like you want to be in a trade just because it's exciting, but you know, sometimes just having patience is actually the best thing to do, and not to be too crazy by just diving in. I've seen a lot of traders get wrecked because they're too impatient. That was where we were. Yeah, so we want to come back in and test. Now, it'd be nice as well because we test, you know, we can see we'd get a nice wick of the previous structure here. So starting to move up a little bit now. And again, it's just by being patient. When you see these kind of moves to the downside so fast, you always expect some sort of retracement. Don't forget, we've also got the VWAP here at 16,780, which is here, which is a little bit higher again. So maybe we come up and test that VWAP. Now, my liquidation, let's just have a little look at that, where we are. So it's about 85 basis points from the point at which I would be at. Now, what I might just do, because the VWAP is always a really key area from an institutional standpoint, whether to put another order at the VWAP, which would have us around, where would that be? 16,780. So be there. So we see some nice structure here. We see some nice structure here. It's only on the 1 minute, but remember we're sniping in and out. So maybe that would also be an interesting point to come across, and we'd still be valid as well in terms of our main kind of 15-minute structure, which is that 16,780. This is roughly where your VWAP is. Still on that downward spiral and would be, you know, to the upside. So let's go ahead and do that, right? So 16,780. I'm just gonna go and so you guys can see what's going on. Move us across. Okay. So 16,780. This would be our second entry. So we're 25% of the position in on here. So let's go ahead and that's 16,780. It's only a slight move up, but I do like that position. So average liquidation will be 17,250. We're on cross margin mode, 100x leverage is our second entry. And I'll just leave that for now, because what I might do, we are in hedge mode, right? Just in case. Yeah. What I might do is, if we start to see that the move is running away from us, is look to hedge, which allows us to then manage out any potential loss if it starts to come into play. So I'll just keep that there. Let's get back into the 1 minute. Okay. So let me just add in the MFI just on the small time frame. Guys, can you do us a favor? If you're watching in, can you just drop a message in the chat just so I can see that there's people here, because I actually don't know. I'm assuming we're live, but wouldn't that be funny if I've been waffling on to myself and no one's been able to watch? But yeah, if you could just drop something in the chat, that would be great. Six of us watching. Thank you, Dave. Oh, divided Gamer United. Right, so nice to see you guys. Thanks very much for that. Appreciate it. All right. So we've got 15-minute up on Bybit. As I say, we want to see a little push to the upside. I mean, if you look, thing I always like to see is, do we have any liquidity above or below, at least on high block, not high block, sorry, that's Moonriser's gig. I'm talking about book maps. So let me just, but you can see the screen, guys, right? Yeah, you can see. Yeah, that's the non-farm payroll is in an hour, just under an hour. So yeah, going to be interesting. So far, the news has been right against the Fed, hasn't it? I mean, they've had the backs right up with that. I mean, it's going to be interesting to see how they respond. But you know, their only real weapon is to continue to raise rates, which I'm not being funny. I mean, people are starting to feel a pinch already about prices. I mean, everything just seems to be crazily high. Everything, mortgage rates, food, you know. But even with that, it's not affecting anyone. You know, no one's really. There's less people claiming unemployment benefit. There's, you know, more jobs being created. Complete opposite to what the Fed wants. So, no, my order never went through yesterday. I ended up cancelling it. Even if it was in now, it still wouldn't have been tagged. It just didn't hit. So it's been I ended up saying yesterday that I'm going to cancel it and we'll go again today. So we're in a different position now. Now, obviously, this is where I'm hoping that we get our tag. But what's our order at? 16. Remind me where it is. Its first one is 16,762, which is right in the center point here. So 16,762 price just needs to come up to here, and then the second price just needs to come to the VWAP. So let's see. 1 minute, how are we doing? So this is the MFI, if anyone is not aware. This gives you an indication when we are overbought or oversold. These liquidity grabs that keep happening, where we keep pushing to the downside, print the new area, and then we come back, retest, or correct, and then go back down again. They're just classic signs of markets starting to really start to move again now. Don't know about you guys, but damn, I've missed this. Over Christmas was just dreadful. Not being able to trade, really, really dreadful. Seen some nice market orders come through on Bookmap. You can see here the liquidity. Once that liquidity goes there, that 30 odd Bitcoin, it will move to the next level. That's exactly what pushes price. If there was no market aggressors or no one buying at market, then the price would never move, just because you need the aggressors to push the price to eat up whatever liquidity is available, and then move it to the downside or the upside. Don't know if you guys can hear this silly alarm in the background. Really annoying. Let me know what your setup is, guys. Have you guys got any orders? Are you thinking different ideas than what I'm thinking? Be interested to know what you guys think. As I say, my shtick is not normally day trading, but it's interesting because you can apply all the same kinds of ideas and frameworks that you can do on longer term time frames to just shorter term time frames. But just remember that a quick move can happen, and that quick move can oftentimes wreck you. So you've got to be, number one, willing to take the loss, and number two, make sure that you only have your sub account with what you're willing to lose. A good technique and a good idea is that when you become consistent and profitable, at least on your sub account, let's just say, rather than the compound effect, you just use your day trading account to rebalance every single day. So let's say that might be $500, or might be $1,000, might be $10,000, who knows, might be $250 like me. It doesn't matter what the price is or what the value is, but let's say that your conviction is every single day I'm going to trade with that fixed fee, win, lose or draw. So let's say you go on a win streak of 4, 5, 6 days of straight wins, and you're doing really well, and that $250 all of a sudden becomes $2,000 or whatever. The idea is that it doesn't really matter. Every single day you rebalance back to $250. So if you lose $50, then tomorrow you add $50 to that account. If you go up to say $300 or $400, then you take that $150 profit and just put it back into your account. So every single day you're always trading with the same fee and the same value. Gets you into a nice mindset, I guess. But your capital still builds slowly, but all you're really doing is rebalancing, so that you treat it more like a job rather than this crazy idea of blowing up to craziness, and then you all of a sudden you're trading with like $20,000 or $30,000, and that those moves become really scary to you, because you're not looking at it as percentage anymore. You're looking at it as dollar value, and that's where I think sometimes it gets a little bit crazy. So you've got to think about how you want to trade in general as a day trader. But I do like the idea of this rebalancing, where it's how prop firms work as well. By the way, they have a a buying power and an exposure, and then that can be reset every day based on whether they're profitable, or it doesn't have to be every day, it could be every week. So maybe you could set yourself a challenge where you say, right, for my day trading account, I'm going to start with value X, and then I'm going to rebalance every week. So it might be that you compound for a week, and let's say you start with $1,000 and you go from 1,000 to 5,000, let's just say in a week. Let's say you have a really good week. Well, you take that $4,000 profit off the table, and then you rebalance back to $1,000, and then you just keep doing that. And that is another way. Now, obviously, the day trading piece, you're going to make mistakes. Not everything's going to be perfect. It can't be. Otherwise, well, it just wouldn't be. But if you limit if you number one, try and gain consistency, but you limit yourself so that you're not compounding all the time, you do that kind of phased approach, then that could be a good way where you can afford to blow up an account. Let's say you use an isolated margin rather than cross. You can afford to have a bad day where you lose $1,000 if you've over the last week you've won $4,000 or $5,000 by trading sensibly. So just a few different ideas on how to think about managing your day trading account. Obviously, we're always compounding on the safer ones. I say safer, but you know what I mean. We much less leverage and much less risk. But on your day trading one, it's not a bad idea to think about how you wanna collectively manage that. So I don't know. I mean, I'm starting with $250, and I'm just gonna. My idea is that we'll keep doing this every day, and let's just see where we get to. But I think I'll probably look at reconciliation once a week to a specific fee and value, and we'll figure out what that needs to be. Now, how do we think about this now? So this is our Fibonacci retracement. We've gone literally, respected the 0.5. That would have been a perfect level to have gone in. Damn, again, same thing that happened to me yesterday. And then we looked like we were going to come and retrace back up, but again, not yet. Now it's very easy to just dive in because of boredom. But trust me, it's not a good idea. But it kind of feels like these these live day trading sessions are pretty static until activity happens, which is kind of the reason why I think, is it really worth doing these sessions when no real value is happening, or do I record them offline, fast forward to the point at which it comes good, and then it's always a day behind? But I'm about transparency, to be completely honest. I'd rather just be transparent and say, well, this is the reality. Not everything goes smooth. Theoretically, you could say, okay, well, now it might be that we've hit a bottom here. So this is a lower low, higher low, higher low, and moving to the upside. So we could start to see a bit of a move up, which is why we just need to be patient. But you guys have the ability to drop on, drop off anytime you want, and just check back in. Let me see who we've got online. I bet you there's a way, by the way, which we could vocalize this through Discord, so we can chat at the same time, and it's not just me waffling on. Let's see. Oh, 6. Doesn't tell me who I've got. Who else is here? Is there anyone not in the server here? Moonrise? No, exactly. David Gamers United. What's your name in the server? If you are in the server. Okay, that's interesting. I didn't realise that. Let me just hop to the server real quick. Okay, so if I go to Patrons Hangout, let me just see what happens now. And maybe if you guys jump to the Patrons Hangout, we can make it a little bit more interactive.
Hello.
That's better. Now, I wonder if I can take the output. That might it might do things a bit weird. Mayhem, perfect. I can hear your voice. That's much better.
Hmm.
So yeah, this is the boring world of day trading. It's not sexy, but you've got to. For me, anyway, this is genuine, right? By the way, this is not anything other than pure genuine. You got to wait for the markets to come to your area of value. If it doesn't, then it's not. It's just not worth getting in. Do you know what I mean? Like for me, where would you be if you would be anticipating a move? Where would you be anticipating a move to get into yourself? I mean,
Hmm.
would you counter what I've done there? Is there anything you'd do differently?
Like as a day trade,
As a day trade, I mean, do you do many day trades?
I'd like to,
Okay.
but I don't think my area of expertise is there yet.
Well, the key thing is always structure, right? Number one, can you identify a trend, right? That's the big question. Not just on a short term, but on a longer time frame. And then it's like, okay, well, if I can identify a trend, then I can jump into a trend, but ideally waiting for an area of value to have been hit first. That's why a lot of people use the alerting functionality, so you can, you're not sitting here waiting for the charts. And in the forex world, you could have like, GBP, JPY, you could have like USD, GBP, you could have Euro, USD. So you have a number of these different forex trading pairs where they'll map out the daily zones. So, daily high, daily low, and then do that across like 5, 6 different pairs, and then they're just waiting. So they wouldn't do right on the zone, they do just below it or just above it, so that as it's approaching that, they can get themselves ready for an order. And then just see how it reacts to those zones. But because obviously Bitcoin would it's kind of does its own thing, if that makes sense. It's not like, just all of a sudden it's gone a little bit crazy. It's not like we're waiting for the open to happen. Normally, we do see some activity when the open happens, but right now it's a little bit static. So, but before we had that kind of crazy move, didn't we? Where we just had this nice sell off. But yeah, it's why you've just got to it's why you've just got to be patient. But it is good to kind of identify them zones. As I say, I've done it on mine. These are really where I'd like to see us come to, because I know for a fact we're going to get sharp reactions one way or the other. So it's like, okay, well, if the price really wants to come up to there, I'll be whacking in a nice short position if I was, let's say, day trading and not swing trading. Same here, I'll be putting a long in, a long and a long, because this is a much more riskier account. Yeah, it's like one that I'm happy to risk rather than and using high leverage, rather than kind of thinking, well, on a longer time frame, this we might get a reaction, but ultimately the macro is down, and therefore I would suggest that these eventually will all go, and we'll continue down to that kind of 16,200 zone, and then see what kind of reaction we get there. More often than not, it's the reaction that you're looking for rather than the move, because the reaction tells you a lot more about whether the bulls have stepped in, absorbed that pressure. If you come down to a specific key area of value, like that 16,200 or even the 15,400, which is the pivot low, and you don't see a huge reaction, as in whoosh, complete, all the bulls step in and bang right to the upside, then that's a concern for the bulls. And if we come down and hit that new pivot low as an example, and we start to see a slow retracement, then that's not a good sign. Good sign if you're shorting, not a good sign if you're longing. So it's always like not a bad idea when you come to these kind of big areas of value to have another account, which let's say you are happy to have at risk, but on the basis that you're going to get a strong reaction from the bulls, and if you're using high leverage, even though the account size is small, you can get a really, really nice return. So it's almost like counter trading your narrative of your swing trade with a small amount of capital with much higher leverage. So win-win whatever way you go, really, because on the swing trade, the idea is that it's still macro environment is bearish, but on the shorter term, it's almost like you've hedged with a really high leverage when you get down to that kind of key area and zone. So,
Hello guys,
hey Vlad.
can you hear me?
Yeah,
Sorry, I was eating, so I couldn't speak.
that's okay.
So, I have a question right here. I can see you are using 0.61 and 0.65
Yeah.
as a target for. Can you explain why are you using 0.652, please?
It's the golden pocket. It's you may have heard the term referenced. It's called the golden pocket. So you have obviously your 0.5 is your 50%, your 618. Traders generally like to get back to that golden pocket area. So 0.5 is for me is classed as the tick box. We've got there, but for the value they like to get to the 618 between the 618 and the 65. It's called the golden pocket. If I just
Also, so actually, that's the golden bucket, not the range between 0.5 and 0.618.
It's between 618 and 61.8% and 65%. That's the golden pocket.
Oh, okay,
It's
got it now.
it's why I've coloured them gold, Vlad. Yeah.
Okay, because what I knew from from the past is that the golden bucket it's from 0.5 and 0.618.
No, it's
That's
that small. It's that small pocket there. It's between 618 and 65%.
oh, got it now.
Um,
That's very nice to know. Thank you.
no problem.
So actually, it's good to look at 0.5 as a bounce because you trace, for example, 50%. But when we are talking about taking profit, it's actually better to take, for example, you are taking a little profit at 0.5 if you are in a short, for example, right? You are taking a little profit in 0.5 and maybe.
Well, I mean, the golden pocket is historically known as the area that traders get the best value from. So it's like the 0.5 area is where people, let's say, majority of the people would expect it to go back to. But if let's say you have your orders here, and you'd have a really tight stop loss, then you're probably going to get wicked out. So a lot what more institutional and more kind of smart money goes towards is the 665 to 618. So you see the golden pocket represents a complete price reversal level for an asset and a very likely point of slow or aggressive uptrend. Most traders assume this to be between 618 and 6.65. So that's that golden pocket area there, yeah, what I've mapped out. Can you see that you can see that text on my screen? Yeah. it's 618 and 666 65%. So I just like to map that out as an area on my fib. It's streaming on YouTube. Well, when I first started, I was waffling to myself, and obviously you guys could text via YouTube. But so what? So because I felt a bit lonely, I yeah, you look on you. What would be amazing? What would be amazing actually is if I could have the output source of Discord fed through, there's probably a way to do it, fed through OBS, so that the recording also picks up your voices as well on the recording. So, because anyone looking back and watching this as a live session will think, oh, we're starting to see more movement to the downside of your team. More movement to the downside. Now, my TP on my swing trade, as I say, is at that. Let me just switch. My TP is kind of that 16,550, 16,550. One sort of round here. I mean, we're some way off that yet, but you know, if I look left, let me just go to our. Oh, we are looking rather overbought. Sorry, oversold. Yeah, this is
I can show you later how to sort your OBS out if you want.
Yeah, if you can, I'd really like to be able to source the output of Discord. That'd be nice. That. So, what do we see to the left? So we've got, I'll say, this consolidation piece here. If we get past this order block here, which I think will provide a stiff resistance, I have to be honest, just because we've seen a real reaction here, and that's why I've mapped that out as an area of interest on the chart. But I think we're seeing some nice reaction here. Let's just see this because that's nice to see in real time. Oof.
Apex, I'm not hearing your voice I'm just getting the old video on YouTube. Are you on another?
No.
Have you started in a...
So are you getting my voice on YouTube?
Yeah, but I'm listening to an older video here, like the one that you just did prior. Do you have a link for where you are right now? The new link?
His stream's got a delay on it.
It's just delayed. It's just delayed. It's just the way it. Oh, here we go, guys.
Okay.
Big push to the downside. Oh.
I can also show you how to fix
wow,
that later, Apex, if you want it to be like seconds behind.
Yeah,
rather than like a few more. I'll show you that later.
It is not great when it's delayed because I'm seeing some nice activity now. You can see that 16,670 building up, so it's kind of looking like the original plan has been invalidated. Okay, so I'm going to cancel these orders, I think.
Are you guys looking to long BTC?
Nope, absolutely not yet.
No, it's still very, very momentous. The move is still very sharp.
Yeah,
so I would just hold off.
Does lower low equal a dump?
Does a lower
low mean is bearish? Is it bearish or bullish or lower low?
Lower low is bearish.
Right.
Lower low is
so
market structure is lower than the previous structure.
For example, when I said for low for Solana, it's on 1 hour, so I think it's a good enough time frame to say it's bearish.
Mm-hmm.
So right now it's going down, but I don't know. We have a level for Fibonacci on 12.5, and the next one is 12. So
we have a monthly pivot point at 16,645. So I'd expect also a bit of a reaction around there too.
Yeah, well, I have a long from 564 or something like that. It's actually on the VPVR, I think, from a macro.
Okay. In some nice.
Yeah, exactly that.
Yeah, was that at the pivot point?
Oh no. Oh. Mine it's 564.
Okay, I'm just gonna switch.
Actually, I never used this this tool like pivots something. I think.
One 1 minute, 5 minute, 15 minute. Yeah, but not forgetting that you need your 1 hour and 2 hour and whatnot as kind of a more macro understanding of where the markets are going. Do you know what I mean? So it's like that's why if just so you'd understand why I created these zones here. For me personally was if you can't see it right now because I know it's slightly delayed.
I really wish you can bring it. I really wish you would just put it here where we can all see it, because this whole back and forth with YouTube and here, it's just it's not registering. I'm not finding what you're talking about, so I can't really see.
Well, you'll if you watch YouTube, it'll come in a second.
I'll rewatch it. Yeah, I'll rewatch it. I guess. Yeah, but so 1 minute and 15 minute for I've never traded 1 minute before.
Well, all I'm doing is I'm using the 1 hour time frame to map key zones, right? And I know that price is gonna zigzag in between these zones. Ultimately, that's gonna be what will probably happen. I mean, you can almost guarantee that price is going to work its way down to this zone, this green zone here. Now, I know I'm slightly delayed on YouTube. We need to fix that. If we can, just because I realise now it's not ideal if it's delayed, because I know you can hear me instantly on Discord, but you can't see me. You can't react to the visual. So we'll get that sorted anyway. But this might be now. This is probably going to be a VRVP area. This area which I'm focusing on, and we might get more sticky around here. The good news is, which I'm quite happy about, is we've at least broken the zone of that 16,800, which has been a nightmare to get through. But what I would like us to do is to break this zone here and then come down to the next zone. And even if we just start, oh, here we go. Come on. Sorry guys, I'm just watching in real time the book map, which is it's great to see. Yeah, so maybe to make it easier, I'll come back off Discord because I don't know. I mean, how long is the delay before you guys can actually see the visual?
10 seconds.
Is it about 10 seconds?
I mean, what you could do is also stream in Discord, and then the people in Discord can view the Discord version, and YouTube can do YouTube.
Okay.
Yeah, I think that would work pretty well, but that might double your load with OBS.
It will, but your Mac should be fine.
Okay, let me just see if I can figure that out. So.
Yeah, it's not like you're streaming a game or anything.
Let's see. Trouble is, let me try that. Does that work for you guys?
That's it, yeah.
Wonderful. 1080p, 60 FPS.
Yeah? We're good?
Yeah, it'll work. Yeah.
Does that?
Fantastic. Let's do it.
I'll watch the YouTube version to see how that.
Okay, yeah, let me know if it gets a bit choppy, mate.
Should be fine now.
Okay.
Your PC's alright now, so.
Yeah, so we're looking a little bit oversold.
So what you did was you basically just took the fib of that recent move, and then you went to the golden pocket. This most recent move, that right?
Yes.
Okay.
Yeah, it wasn't that one actually. It was.
It was the one lower. Okay.
It was that one there, yeah. So that would be. That's giving yourself some safety margin, because if it right now, if you look at that move there, it's too much of a sell-off. So I know without a shadow of a doubt we are going to retrace back up. We've seen too much of a sell-off, and it hasn't been like this. Like, that's a really, really strong move, and we haven't really. Okay, we've had a retracement here, but when you see these small, and this is just we'll see how this plays out, but when you see these kind of breakdowns like this, it signifies that we're going to get, number one, we'll get a retracement, but I think we're going to get a fire move.
Pardon me, sorry.
I think we're going to get a really long move that kind of comes off of this. So it's like, well, hopefully we get a nice little retracement first. But you're looking at your 0.5 now. Is nicely on the order block area of this set of candles here. But we broke through that. Didn't really pay this order block too much respect at all. So it's interesting. But are you guys?
There's a fair value gap also on the if you put on your fair value gap tab. There's one that's around the 16760, and I know they usually try to come back and balance that out. So maybe that could be a good area.
We also have news in 20 minutes.
Yeah.
What news is dropping today?
Non-farm payroll.
We've got that.
It's interesting how I drew these zones out, and these were absolutely spot on from where, pretty much anyway, where the Lux Algo painted them out. So that gives me comfort that my TA wasn't too far out.
You actually don't need to pay the premium for it if you just...
You don't. Yeah, I've just realized we don't even need the premium, but it's just nice to have that extra help. Yeah. But I mean, what we've been doing so far, drawing out the levels, the daily, the weekly, the VRVP levels, just doing our own order blocks. I mean,
it's really good. Honestly, you're spot on them, and it's really good to be able to do this without any. You as a trader, your goal is to be able to map out on a chart a framework and a template for you to understand where price is going to go, with some level of confidence. And what is that? That is obviously mapping out your key daily levels, your weekly levels, your monthly levels. That's a given. Understanding where your volume profiles are, because that is another really important thing to map out. Understanding where your value area high, your value area low, your points of control. All of these things are really important for just creating a framework, printing out on a chart where price is likely to go and get sticky. Now, what you don't know is, okay, well, these are the previous data points that have shown us where price can get sticky. Doesn't tell us where it's going to go to or come from. Obviously, that's where your oscillators then come in and give you a bit of a steer when you're looking overbought, oversold. Then on top of that, you're looking at fair value gaps, you're looking at order blocks, previous areas. I don't know if you guys caught the MDB AI session I done yesterday live, but I asked them to pick a different ticker symbol rather than BTC, because we analyze BTC all the time, and he picked BNB. So we just went at a point in time, way back when, and just done the framework, mapped it all out, and then we moved it forward, and I drew an order block where I would take an order, and because you can fast forward in time, if you know what I mean, when you're kind of reviewing it, it went and picked up the order block like 6 days later, and then crashed down about 70, 80, 90% or something stupid like that. And as a move, I mean, we caught it live on the stream, which was fun. Would have been insane. And all it is, and there was no technical analysis other than mapping out your key levels, mapping out your volume profiles, understanding your smart money, i.e. where price will get rejected, areas of value. I just don't think it needs to be much more difficult. I really don't. I don't think it needs to be more complex than that. Lux Algo and all these things that, add a nice little bit of visual and sprinkle to the chart. But you should not be able to. You should be able to do all of what we do on Lux Algo without needing Lux Algo. For me, it just makes it easy for me. But I always like to test myself and say, can I map out these order blocks without Lux Algo? And obviously I can. But that's where you need to be at.
Apex, a little bit of a tangent, but I was wondering if you you're interested in making any sort of like algo trading content and like performance analysis stuff, because I did learn about a lot of that, and I've seen it both like personally as a retail and a little bit working, or I interned at a hedge fund. So
I don't know.
Yeah.
I don't know if I'd have anything good to add. I'm not. Honestly, I'm not an algo trader. I've not really been involved in trading with algos, and I wouldn't like to. I wouldn't like to comment on something that I'm not knowledgeable enough on.
Sorry, I should have been a little more clear about it, because I like your trading stuff has been really helpful for me, and that goes a lot into the decision process for designing algos. But maybe if you're willing, like I'd be down to help contribute algo content.
That'd be sweet.
Yeah,
I think it'd be cool to have like a bot,
like a dollar cost averaging bot kind of. I don't know what bots are.
We can do lots of different ones, because personally right now I'm working on a really fancy, reinforcement learning AI trading thing, but that's a big long-term project. But I've had, some basic like arbitrage bots, and I have basically Python code that sort of does spot futures arbitrage for me.
Yeah.
Where right now the funding rate is positive, right? So
Sure.
I have bots on a bunch of different exchanges, and they basically go long 1x in the spot market, and then they go short 1x in the futures market. And so any price movement in one will get nullified by the other, but then you make money from funding rate payouts every 8 hours.
Yeah, I've thought about that actually as a really good idea. Obviously, I don't know how to do the bots. That's my downfall. But I could see how you can make money from the funding rate if you know what you're doing. So that's really interesting. In terms of being able to create a bot, I would love to. I mean, I've been looking at different things from ChatGPT and seeing if there's a way in which you could encompass kind of my ideas and the way I would approach things, but I don't know how much, and this is genuine, I don't know how much of it is intuition or whether it can be really programmatically,
Well, so one of the interesting things with like rule-based strategies is you can tell if there's something really to it, or if it's just some random intuition thing you have, if like a basic machine learning algorithm can pick up on it. So I did a little test project on just trading a leveraged S&P 500 stock, and basically all it did was I had a pretty simple momentum-based strategy that I'd been using, and I just fed that as a state into the AI algorithm, and it basically improved the strategy, where it found more efficient entries and exits, but it's more or less following the same trend as the manual strategy would have. It just found some better opportunities, so it ended up with slightly higher return.
Yeah, so that optimized it.
Yeah, so that basically means that that momentum strategy I was using, there was actually something to it, and I wasn't just sort of reacting to the market with my intuition.
I would absolutely be down for kind of seeing if there's anything we can come up with as an idea, and work together on something. So just let me know what your thoughts would be, and how we, what inputs we'd need to think about, and ultimately about how we'd maybe trial it and test it out. But for sure, I would be definitely willing to give that a go. Who am I speaking to? Sorry, even if it's just your Discord name.
Sorry, I'm Bane of Kings.
But Bane, nice to speak to you, dude. I always see you coming in with some good conversation in the server. I think the most important one was never add to a losing position.
Hey, I don't want to lose $5,000 like I did.
Oh, $5,000 for real?
So I've been doing this for a while now, so I've got experience. But obviously, when I started out, things weren't going that great, and I lost a grand total of $5,000 before I figured out something that worked.
You know,
maybe you should share. Maybe you should share what's working for you now that you've learned how to hard lesson, and now you know what not to do, right?
Yeah, that's why I've been dropping like those basic things in the chat. But really, I guess it's just the way that my brain works because I'm really math and stats heavy. So these sort of algorithmic strategies that basically exploit statistics tend to work best for me. But you know, I know actual day traders that make a living as a retail day trader, and they just kind of look at like NASDAQ futures and they're just eyeballing it, and they've developed this intuition over the years, and they just go for it, and it works.
Yeah, very much.
I mean, they obviously have indicators and stuff that help them, but they realize like where the limitations are, and they can like adapt on the fly to different conditions. And I'm not quite there yet with my trading, so I really leverage stats and algos to bail me out.
Yeah, it's interesting. A lot of humans, just everything's pattern recognition, isn't it? We are trained to see patterns. Sometimes the patterns are there, sometimes the patterns aren't there, but we make the patterns because we think they're there. And you know, there is an element for sure of I think a lot of the time you'll have a good feeling about these kind of things, and you'll maybe pick up on past experience where you've seen something similar and it'll play out. I mean, a lot of the time I guess intuition plays into it, but a lot of the time it's always about human nature. So you think of like Fibonacci sequences, and you know, again, things like Elliott wave theory, where you're starting to see, you know, these patterns play out, but you don't know it's a pattern that's played out until it starts to formulate, and then you think, okay, well now this is an Elliott wave. I know exactly how to trade. Guess what? Institutional and hedge funds know that those kind of patterns can sometimes be set up for people to, you know, expect an outcome when that outcome doesn't happen. It's like, okay, everything in trading, the way I like to think of it is setting of traps, because it's a zero-sum game. Ultimately, you know, you are selling to a buyer, and a buyer is buying from a seller. Someone has to
that's
lose out.
all trade, isn't it? Right? I would only sell something if I believe that it's worth less than
value.
what I sell.
Absolutely spot on. You know, that is the key trait. It's like, it's really only the market maker makes money in markets because they're, you know, making a commission, but everyone else, you know, you're buying and selling. So you buy what you believe is a price that's valuable, and you sell, like you just said, Bain, for a price that you think you're getting a good value for. And that's the art of trading. You pay for what you believe is valuable. So you're always going to get winners and losers each side. I think the thing that you've got to get into your mindset, for me personally anyway, is trying to think about where the smart money goes. Because a lot of retailers, I said this before, you know, you're trained, you have an RSI, you have EMAs, you have, you know, MACDs. 90% of the fucking population will use these indicators day in, day out. And, you know, some days they'll have a bit of a win, some days they'll lose, and yada. It just, that's the mentality. It's just, you know, or you'll buy a new indicator because you think it's the next greatest thing. Realistically, you've got to forget about all that kind of stuff. That really, you should focus on understanding where money, you know, where are your key zones? Why are they a key zone? Well, you can look at past data to understand that, you know, there's been an order block at a specific level, so something has happened that's made that zone, you know, a key area. So that's an area of interest. Why do you
actually think... you know something really interesting about indicator correlation? Like, a lot of people basically are making decisions off of very noisy signals because there's a lot of redundancy in the information that they give you.
It's mass psychology.
Like, what?
It's mass psychology. If enough people believe in them indicators, then the markets will move, of course. It's just, you know, if everyone's looking at the same MACD with the exact same settings, and the moment it becomes overbought, right, that's my signal to sell. Doesn't matter if it's right, wrong, or indifferent. If there's enough money to move that market because enough people believe in that indicator, then it's that psychology of, well, that's what the indicator's telling me, so therefore I'm going to move it. That's why.
And so this actually lets you like you are correct about that, but this kind of mass psychology gets encoded in the long-term price action of any asset, and so you can do correlation studies. So I did it just simple for some volatility indicators. So I looked at basically all of the popular indicators, and so even like MACD. So that's what I would call something like a compound indicator, because you take multiple EMAs, subtract them, and take the EMA to get a signal line and all that. But at the end of the day, you're just doing a bunch of EMAs. So MACD is a compound indicator. EMA is a atomic indicator, is what I say, or like a base unit.
Yeah.
And so if you take all of these base unit indicators and all these compound ones, and you basically just get, like, I got data going all the way back to 2020, and I calculated the indicator for every 4-hour candle. And then I use Python to just calculate the correlation coefficients. And I find it that many, many indicators are very strongly correlated with each other.
Yeah.
So it doesn't make sense to use all of them because they're all telling you essentially the same information.
Yeah.
And so you end up making decisions with a lot of noise. And that is what ends up getting retail wrecked. Like, I improved my output quite a bit just by cutting down on the number of things I was looking at, paradoxically.
Honestly, I always say, trading doesn't have to be too complex. It's levels. I always like to trade level to level, and that's why where I'll DCA at a specific level to level is because you can afford a bit of you can afford a bit of error in your judgment, and then what you can also do is say, well, okay, if we break this level, where's the next likely level, and what confluence have we got around there? And more often than not, it will be Fibonacci, so zones where natural human instinct tells you to go there. Could be a key daily level where we've seen price reverse from before, and that's important because we're 3 minutes away from the news and we're seeing some crazy action happening. So why is it happening?
There was crazy action yesterday leading up to the news too. So
yeah, well, interestingly
hopefully
enough,
it breaks to the downside because I've been holding a short since yesterday night.
Yeah, this discount area here. We've had 2 straight really bad news events, right, which haven't really affected the markets until today. But you always look at that kind of weekly structure where you start at one point, you head to the top, you get to your midway point on a Thursday, and then you break back down again. So it kind of feels like we are starting to move down, but it's crazy. It's like we're 2 minutes away from the news events. It's like inside information's been leaked, and now we are starting to see some blood on the dance floor.
Well, so an interesting thing about that is this I actually learned interning at hedge funds. There's a field of machine learning called natural language processing.
Yeah.
And a big component of that is called sentiment analysis. So that's if you heard about the Cambridge Analytica scandal years ago, that's essentially what they were doing. Is they were looking at your social media and figuring out like what sentiments you agreed with and what things you didn't. And then based on that, it like showed you stuff, and that's how they manipulated voters. But on a broader scale, what these hedge funds do is they basically have Twitter bots and other web scrapers that are just trawling the internet for any relevant news. And then when they do, they feed it into their sentiment analysis model. And that is integrated into whatever algorithm they're using to make trading decisions. So sometimes, like even with like literally zero human volume going on, these bots will sometimes react to news in unexpected ways and cause huge fluctuations in the market, even though there's no actual reality.
Yeah, that is crazy. Yeah, I mean, look, I'm just looking at this. We've got this key level here at 16,600. There's nearly 1,100 Bitcoin. There we go. Broke through the zone.
Oh damn, that's great. Oh, that's.
And there we go. Yeah, nice repainting back in, but clearly the news might have been positive because the market maker might have. No, I'm guessing it's negative. I can't, guys. If anyone.
No, it's the resistance rally. So we're probably going to see it push back up for a few candles before capitulating. Okay. Yeah, there we go.
Okay. Oh, filled. Yeah.
fill in a bunch
Okay.
of shorts.
So I've been filled, but I might, because it's happening so fast, I could possibly get liquidated. I hope not.
So what was the news? Was it bad or good?
Oh damn, that is a rally.
Was the news good or bad?
I can't see. I haven't seen the news. Let's just hop over.
It was so the forecast was 200k, but it came out as 223k.
So that's bad for the Fed, right?
So it's higher.
It's a liquidity
For the
grab.
non-farmer
Now I'm on cross margin. So let me just change where I am here, guys, just so you know.
So does that mean it's gonna the markets are like?
I right now I can't see the data, but we are. So where's my liquidation level here? I'm at 17,051. So I will be liquidated. This is on my day trade account, right? 17,051, somewhere around here. I feel confident. I feel quite comfortable about that. $13 up right now, $12, $16. I think that was just a scam wick, gents, ladies. Scam wick, typical scam wick. Yeah, well, let's think about it, right? If no one's selling, if no one's buying, then everyone's selling, and you need someone to buy. So what the market maker will do is push the price to the upside, build that liquidity up, and then boom, dump it again. Yeah. Otherwise, he's not getting any value for building this. Now he'll be building his longs on the way down, but right now, yeah, we're just seeing nice reaction. Got that fill. We were patient. We've got more news at 3 p.m. as well, I believe. Now you can see over on the other screen, the previous day low is now acting as a support. Again, level to level is really cool. Now, also, just let me nip back to the other page. And this is why I really like Bookmap, as we can see quite clearly that we're respecting the volume weighted average price. Let me just fade that across. So we see VWAP is currently being respected right now. But that was a nice move. I'm just going to go ahead and dive into the Forex Factory on my calendar. I just want to see, the news for myself so I can just understand what happened there. So unemployment rate is dropping. Oh, that's not good for the Fed. Unemployment rate is dropped. Wow. They
So when you say not good for the Fed,
not good for the Fed. Well, think about it, right? So
no. Jobs going down is really good for the Fed. It's bad for everyone else.
Unemployment rate is dropping. That's not good for the Fed. When they want to contract the economy, they want more unemployment because it indicates that the pressures that are being added on with the likes of the Fed, the rate increases, meaning that jobs are starting to come out and you're getting a contraction of the economy. If your unemployment rate is going down, then that means less people are unemployed. That's not a good outcome.
Well, it's not a good outcome for the economy, but it's good for the Fed because the Fed really has two mandates and two mandates only, which is keeping the unemployment rate keeping unemployment under some level and keeping inflation to 2% yearly.
Yeah.
And basically, inflation is going crazy right now, and so the more that the job market stays strong, the more confident that they'll feel in keeping rate hikes going up.
I have a different idea on that though, in the sense that, they obviously need to keep increasing the rates, right? But if the rates, right now, how are the rates affecting people? They're affecting mortgages, they're affecting loans, they're affecting foods, they're affecting everything. The CPI, the consumer price index, all of these kind of things, prices are going up, right? But if
so that's you have it a little backwards there because the interest rate hikes, one, they take a while to percolate through the economy for the effect to actually happen. And these interest rate hikes are in response to the CPI inflation that's going on, which is a suspect statistic, but we talk about that later. But so it's not that the inflation, or it's not that their rate hikes are causing all those prices to go up. It's the other way around. Now there's one time before where you like, so in the 70s during the first OPEC crisis, we had what's called stagflation, where interest rates, like, they were doing everything to keep inflation down, but it wasn't going down. So you had recessionary policy being paired with an environment that refused to correct. So that's a really bad situation, but we're not there right now because the jobs market keeps coming in so strong. So
for the markets, because what I'm saying is
not good for the market short term, but it is good long term, because this washes out all of the over leveraged degens. Because like the S&P 500, everyone, or at least if you're in the US or you have access, a lot of people will say, just buy the S&P 500 and you'll beat 99% of the market. But those outsized returns only happened, especially like the last 10 years, because of this artificial bubble created by what the US government did in 2008. And so we've been living in this really artificial bubble and have had a lot of fake growth. And so this is the correction that was going to come. And yes, it sucks for a lot of people right now, but in the long term, this is a good thing for everyone.
Yeah, no, I definitely agree with that for sure. I think for me, it's the reaction to the news. It's like, okay, well, the Fed can continue to raise rates because they think, okay, unemployment isn't really going down. People are still in jobs. It means they can almost take on the brunt of these rate hikes. But that is still a quasi way of saying, look, we're just gonna, how can we reduce inflation if it's not affecting anyone because people are still in jobs?
Well, so the problem right now is because the only way the Fed can really interact with the economy is interest rate changes and money printing. And those are pretty crude levers, and really those only affect the demand side of the equation.
Sure.
But a lot of what's causing inflation right now has nothing to do with demand. It's all about supply. And so the Fed really can't do much about that, but they have a mandate from the US Congress to keep inflation down. So their only option is to just crush demand until it falls in line with the supply, which is going to get worse as China starts reopening. So we're in for a really bearish Q1.
It's going to be crazy because, at some point, because everything, like you say, is lagging, is a lagging indicator, they will apply the rates and then they'll give the news, they'll understand what the reaction was a month later. It's like, well, prices are going to continue.
Well, so the internet actually helps with this because ever since then, the Fed chair can basically, they'll do a press conference or something, and the minutes will get released. And then the market will price in the expectation of the rate hike early on. So like,
Yeah. Okay. Well, that's interesting. It's good to get that perspective because, my interpretation is like, I think, well, the Fed have got a problem on their hands because they want to see a contraction. Of course, they want to see a contraction because that means that the rate hikes that they're applying is starting to squeeze the economy, and then they can start to reduce inflation, which is essentially what they're trying to do. But the way I thought about it is, well, if people are still in jobs and they're accepting and absorbing the fact that these rates are continue to go up, and it's not really affecting them because they're still in jobs, they're still getting wage increases, and therefore they can pay the extra money that it's going to take for the inflation that's going up. It's like I still struggle to see how that's a good thing for how the markets anticipate that. Okay, well, now we have to buckle in. We know we're going to start to see increased rates. There's nothing against that now, and it's like whether we've priced it in now in the anticipation that we know it's going to happen, and therefore the reaction isn't as bad, or what. That's the thing that I always get. Well, it just doesn't make sense. I would have thought, unemployment has dropped. Therefore, that's not a great sign for the Fed. They want to see reduction, and then we would, so if unemployment rate would have been down, let's just say, up, as in more people are now unemployed, that would have given me an indication that the Fed can think, right, what we're doing is working. Therefore, that's a bullish sign to the market that we may start to see the end of the road, as an example. But what I see in here with this reaction is the opposite. Yeah. Mm. Very interesting. What's that do? Yeah, I mean,
And then that's it. And I hope it just keeps coming down because
if you look at like GMX, right, they use Chainlink to stabilize their prices. So there's no, even though in aggregate there's less liquidity on GMX than any exchange, because they use the whole blockchain to set the price. There's no scam wicks or grabs like that. And this is a unique feature of crypto. You don't actually. Okay, so this is where things get spicy. Oh, there we go.
Oh boy. So we've had the news. That's probably what it is. I didn't even know what time was the news. We've probably had that already.
Oh yeah, that was the news came out. Unemployment.
That's
claims
actually what we were talking about when you came back.
Dropping.
So if Dixie's dropping, then we're going up, guys. I mean, we're probably going back to that C wave you talked about.
Well, possibly. I still struggle with the fact that it's bullish news. For me.
Bullish news for who? For Dixie or bullish news for us?
Well, yeah. Hang on. Let me just frame that in a different context. So I think of bullish news in two different contexts. There's a risk assets context and an off risk assets context. So yields and currency for me are your off risk assets. And when I look at the DXY as an example, the arse has fallen out of the DXY. So DXY is dropping significantly from that unemployment news, which is a non-risk asset. Sorry, it's less risky. Whereas you're looking at Bitcoin, is a risky asset. It's doing the inverse of that, which you'd expect because they are usually inversely correlated. I'm just struggling to wrap my head around the fact that unemployment news, as I say, was good for the Fed. I thought it was bad for the Fed, but absolutely, Bain, you must be correct because quite clearly we're not seeing bearish news on riskier assets. It's like people are flocking to riskier assets from that news because unemployment rate was down. Because what that means is, okay, great, now the Fed can increase the rates.
That's also the market pricing in that like long-term inflation will come down.
Yeah.
Because basically what caused some of the earlier crashes was when the Fed was like, hey, we're going to keep going. Our target is higher and our rate increase is also going to be larger each time. And so the markets panicked over that because that's a sign that, the inflation is not coming down, essentially.
Yeah.
So basically, when he makes the announcement, the markets price in that rate hike. And then when the actual hike happens or the news confirms whether that decision is correct or not, that is sort of where like the rest of that effect comes from.
Got it. Okay.
Actually, that's another thing. Like, if you want, I can, we can talk more in DMs later about the specifics. But I can also do like macro analysis from the perspective of someone who's working in finance.
I think that would be awesome. Yeah, because I think another liquidity grab, sharp move to the downside. I've got another order, by the way, just at the 16,861. Just in case anyone was curious. I think we've got a wall of liquidity at that 16,8.
Yeah, I have one at 16,860. I put one in at 16,780, and that was before this crazy week. And then I have one at 16,860.
Yeah.
And then all the way up to 17, just in case, because you never know, right?
Yeah, I have my short entry a little higher because I'm still on 100x leverage. So I want to make sure I get a good deal. Hey,
what are you doing on 100x leverage? Like, dude,
I'm on 100x leverage too.
Oh, you're doing an experiment. You're doing a isolated sub account day trading thing. This is not your swing, man. This is my swing, and this is my money. So, I mean,
so
your money too.
I'm really trying to scrape small moves, and I'm doing this to build up initial capital because one of the things I learned, like through research, different strategies work at different scales of capital. And since I'm like literally broke as fuck right now, or I was before I started this, that 100x leverage is absolutely necessary for me to make any sort of profitable move. Because when my entire portfolio is $100, there's only so much gains you can get really anywhere without waiting a really long time. So I'm using leverage, and then I'm basically turning. I'll put $10 of my own in, and then lever it up 100x into 1,000.
Yeah. Yeah. Yeah, I mean, look. Yeah, yeah. That is an interesting thing, but you've got to remember as well, right? So this is why I say, if you want to have a swing trade, you've got to accept that it's a longer term trade. However, this is why but what might have happened is, that news may have came out crazy, bearish. You may not have had a fill because you took a smaller a profit, and then you see a big fall and knife and a crash. That's like, damn, I took profit at like, I took, you know, $300 profit instead of taking like $3,000 or $5,000. And it's like, so that's the thing you've got to just wrestle with in your head, which is why I like this kind of idea of saying, okay, well, me swing trades and me swing trades, that's a more macro analysis that I've applied that I'm happy to stick with. However, I still like the idea of having a little bit of degen spirit, and I like to do a little bit of day trade, and I still like to apply the same kind of ideas. And that's what I'm doing right now. I mean, you know, for all of that huge move, by the way, it was less than a 200 basis point move. It was fuck all, really. It was nothing. We're just looking at the 15-minute candles and thinking, or 30-minute, and thinking, wow, that was crazy. We haven't even broken between zones. Literally, we're literally nothing. It's like, you know, market maker pushing up price. I you know, me and Bain might have to have a wrestle about the idea on this, but he's probably going to be right because he's much more macro savvy than me. But I just have a different idea on why that feels like it should have been bearish news, not bullish. Which I think, I don't know, but this reaction is pure market maker trying to push price up because he wants to get value. Yeah. Mm. Yeah. Well, because they want to pay themselves, don't they? They've booked the positions in through the week, and then they find a place where there's high liquidity, and then they just slam it, bang. Because where you've got high liquidity, you can move mass amounts of capital without things like price impact, slippage, all the stuff that really affects you. If you're in a relatively low area of liquidity, then that's going to affect the market maker if he's trying to get in and get out. So it comes as no surprise that at the end of the week he wants to come and collect. So you're right. No, I don't think so. I mean, look, I could, you know, I've got a 50% of my account here now. I'm $5 in, you know, I'm slightly off. Now I could decide if I wanted to hedge at this point here and say, okay, well, if price starts to go against me, I could do you know, 100% long of equal amount, which means I've locked in my loss, right? So whether the price goes up or price goes down, that is not going anywhere. The only thing I would need to do then is add more margin to this account so that I could start to manage that trade out, whether that was to the upside or the downside. Once the news abates a little bit and settles itself down, that's when you would then think, okay, well, where would my trading plan, you know, be executed? And then you sell the long or you sell the short, whatever it would be, in profit if you're up or down, and then put another short or a long in that is equal to your existing one, which then, you know, you start to reduce your loss base. It's a really well, let's say, I mean, right now, like, let's say, you know, let's say the price comes up to here. I don't like doing it on the. Let's see, because I'm not used to the tooling on this. Where's the favorites on here? I'm absolutely useless on this, honestly. I'll find it now, guys. But if you look at, where's the price stuff here? Price range, right? So I'm right here now. If I look at that price range that's 100 points, right? 100 basis points. You can see that there, right? So let's assume that rather than this being another sell order, it was a buy order, right? That means, let's just show you what I mean. Can I do the command? Yeah. No. Right. There we go. So let's say I want to lock in my loss, right? So I take that's 100 bars. Now let's say, where's that tool? Here. We'll leave it on page. That's my loss, right? Now this would be 100 basis points at loss, but let's say it's $100, just nice easy number, okay? So if this green bar starts to approach up here, I'm $100 in deficit at this point. What I could do is do a long, right? Before, right? So let's say, yeah, I can hear it, okay. I've just realised, but you can't see. I just realised you guys can't see my screen, can you? Sorry, let me stop sharing Discord. No, I'm not gonna stop. I'm stopping sharing that, and I'm gonna share a different screen. Apologies, right? So screens, application, it will be, yeah, there, perfect, right? Okay, so let's start that again, right? So let's assume. Can you guys see my screen? Yeah. Okay, I'm in $6 profit right now, right? But let's assume that wasn't the case, right? And I take, where's this? The price continues to move to the upside, right? So let's say price continues to move up. That's 100 basis points there, right? So let's assume it's $100 in loss because I'm shorting. I'm expecting the price to go down, but the price goes up. 100 basis points. Let's say it's $1 a basis point, just so it's nice and easy numbers. I'm $100 now in deficit. Now my current options right now is I'm DCAing another short order. So if the price continues to rise higher, I'm gonna average my average entry, which would mean that the average entry here would raise a little bit, because, well, it would raise 50% actually, because there's these two orders and these two orders were 50% of, sorry, 100% of the total portfolio account for this sub account. Now that's one way. That's one way to do it. The second way you can do it is if you think, okay, damn, the price might start to really get away from us now, as in the price can continue to go up, but the overall context of the market seems to be down. Well, you can do a long at this position. So what that would do then, as a hedge, is you do a long. And let's just say, nice easy numbers, another 100 basis points. What does that look like now? Well, look, I'm down $100 here, but I've opened up a long of the equal size, and then the price continues to do this. So the price moves up. Let's change that color to orange. So price goes up, comes down, price solid comes here. I fill my long, and then the price continues to go up. Now, this original position here is now in $200 loss because it's a short. This position is in $100 profit. So effectively, net position is $100. Okay, down as in negative, because I'm gaining $100 from the long, but I'm losing $100 because I'm $200 in deficit. So why is that? Why is this now an interesting position to be in? Because let's just say, from our perspective, we still think that the price is going to come down, right? Now let's say this is a key level. Let's see. I'm just not used to doing it, but let's just say, for argument's sake, this is a key level where we think we're going to pivot and come down from. So we could say, okay, well, we're delta neutral. Sorry, we're $100 in deficit, but as the price continues to rise up here, and the price continues to rise up here, I'm in two positions. This is a long position. This is a short position. They cancelled each other out because this is where I've locked in my loss, if that makes sense. Yeah, you can see that. So what you would do now is you would, at this position where you think the price is going to basically top out and then reverse down, is you would sell your long position in profit. Okay, so you'd sell this position, effectively taking that, let's say it's $200 profit now, just for argument's sake, or $270 profit, right? So you sell this position, bang. Now what you're anticipating is you've just taken a profit of $270, but you're down $373. But you think, for whatever reason, that the price is going to start to retrace. So okay, so now you put in another short order, right? So you've got a short order down here, which is $373 in net in deficit, and this is where you're at as a position. But remember, realistically, you're not $373 in deficit, because you've just gained $273 from the previous long. So really your net position is still only $100, yeah? Your net position from your original order. So now you're going to enter the short at this position, right? So you've got a short order here, and you've got a short order here. Now you've got two choices. Do you put a short order at a price that's 1-to-1 ratio of what this original order is, which let's just say it's $100, and let's just say we're going to do the same here. So we're going to take our price here, and now we're going to do an order. Let's say because we're only at $100, how far do we have to retrace back down to essentially neutralize our position? Well, really, it needs to be $50, doesn't it? No, well, it needs to be $100 because we're in $100 deficit. But where your original position was, so this is where it's really powerful. Now, but it's always going to be with risk, because you've got to understand the markets. But our original short was down here, yeah. But this has meant that our new short can be positioned up here, and that we only have to retrace to become break even at that position there. So that is now where I gain my money. Now let's say for whatever reason you think it's only going to retrace 50%, so maybe it retraces to that point. Well, then you would then open up a new hedge position here, but now your deficit is only $50 or $52, or it's a much smaller position. So it's a way in which you're trying to work off your debt position using hedge. Now all you're doing is opening longs and opening shorts of equal amount. You're not really doing anything other than that, if that makes sense. It's nothing, it's just simple stuff. It's just opening a long or opening a short. The price is starting to go away from you, but you still think the context of the market is still in a way in which you can start to work off your debt, as in you still think the market is going to go down, but it's got a bigger retracement, bigger correction than you anticipated. Where you wouldn't want to hedge is if, for whatever reason, the market is just completely on a tear, and you could be stuck. It's just you've got to think about where you want to hedge out to, and where you expect the retracement to occur. That's the power of it, really. So do you accept that $100 loss there and say, okay, well, I'm in a loss, I accept that, and I'm going to come out? Or do you hedge and wait for a better opportunity to work off your debt? That is what hedging it can be used for, amongst other things, but that is a way in which you can use hedging to effectively neutralize your shorts and longs. Does that make sense, Moonrise? Well, let's say you hedged here. For whatever reason, I don't typically use stop losses, as you guys know, but if I would, that's the most you're willing to, you're willing to cut your losses basically. So instead of your stop loss being a stop loss, it's actually a long position, which is to say, okay, well, if the price, sometimes the price can just go against you a little bit, and rather than being stopped out, you're just hedging because you think it might, come back down in an alternative position, and then you take that as a, you can take a position up from a long at the top. There's many. Yes, you do. Yeah. Yeah. Mm. I know. Yeah, it's the thing that always gets you. I mean, but I think, yeah, as a community, we're all learning together, aren't we? Some of us are a little bit more experienced than others. Some of us have better skill sets and different ideas than others. But ultimately, as a team, we all try to help each other out. I'm not, for me, like, I'm really comfortable with trading things like BTC because it's a trustless, non-community based. Doesn't give a crap whether there's a new app coming out or whatever else. That's what I just worry about with Litecoin and Atom and all these kind of community focus, because simply I'm not in the communities. I don't spend time in the communities. I don't know what's coming out next, so I don't like messing with those kind of things, if I'm honest, just because I quite easily things can just go against you, and is that really worth the risk for me? So I'd rather, don't mind having a little dip in now and again, but again, just making sure I'm committing to stuff that I can afford to lose rather than anything else. Back in profit now. I was just saying I'm back in profit now on our little day trade session. So we're going to see how that goes. We're 50% of the fill. If anything, all we really saw was a retracement to where I out the golden pocket zone pretty much to the button. So quite happy with that. Sorry, Bane, go ahead, matey. Yeah, exactly right. Yeah. 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 Sure. Oh God, yeah, for sure. It's crazy. I mean, I don't know what it is about Atom, but Atom just has this kind of really nice chart. I mean, if you look at the chart, it's just been on an absolute tear, and it's almost like this is. Let me go on to maybe the 4 hour might be a little bit too crazy, but I really like how the chart just plays. It's really nice. This kind of formation is easy to trade if you know what you're doing, unless you get a crazy spike. But for me, this tells me that this. Guys, you need to go to YouTube. Sorry. Yeah, it'll be on the YouTube. But when you see the kind of the way it charts, it seems to just have a really solid, you know, it kind of doesn't pay too much attention to Bitcoin and seems to be, a really good solid token. So what it kind of led me to believe is, since I've been trading it, I thought, wow, there must be something behind this Atom token, because it's not really paying too much respect to Bitcoin. If anything, it's, because Bitcoin was having a crazy move, and then it go down and it go up, but Atom just kept on going up and up and up and up ever since, like, the I don't know, the 16th of December. Yeah. No. Right. That's really interesting. Yeah. 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 Bridges. Hmm. Awesome. Well, price seems to be coming back down. As I say, though. Yeah. Yeah. It's good. It's good for us, because what I want to start to try and do is, I mean, news events always mess with where we are with things, but it was still nice to know was the original execution of where I thought price, where I would like to get price. Let's say it's an area of value where I wanted the price to come back to, came to that exact, pretty much a slight wick above that, filled two of the positions which were relatively close to each other. Because if you remember, I picked a fair value gap. Well, actually, I picked the golden pocket first, and then a fair value gap which was slightly above. I've got another two positions which are closer to where Bain is actually on where he would like price to go back to in order to get a fill. But that liquidity grab wasn't massive, really. It was a couple of 100 basis points, and it'd be interesting to see. We've got 15 minutes before New York opens up. That's always going to be a fun time to see how they take the news. But you're going to get the Brink session, which is half an hour beforehand, which likes to kind of set up the move for the day. And then 3 o'clock comes, 3 o'clock UK time, that is. You tend to see the reality of how the markets want to drive things. But just market structure, normally you tend to see a sell-off on the Fridays rather than buy. So yeah, exactly. So it's going to be good. As well as this, we've had some really good kind of trade executions for MDB. As you know, I'm trading assets under management for MDB, which feed into the farms, which is quite cool. We got some nice profits from the swing trade that we've been on. So would like to see a bit more downward action before we have that session a bit live later on. But as I say, in profit right now, management wise, I'm just going to continue to hold this until we break structure. What does that mean? That means higher highs, higher lows, using the hour time frame as a marker. I mean, I don't know what you guys can see, but I'd constitute these kind of levels. So kind of first level or zone, this would be second zone. So if I was using a stop loss, I'm not thinking about it anytime soon, but stop loss would be above the zone. But the only time I would start using stop loss is when we start to build more structure down here, and then the stop loss would effectively be my take profit zone effectively. So let's say that the action started to do, so rather than having a target, let's say the price done this, then it come up and then goes back down and another retest or whatever. I know it doesn't exactly go like that, but you know what I mean. So I would be then using my stop loss here, and it'd be there on the hour, yeah, not the 15-minute, because the 15 we're going to see a lot more zigzag. I would manage it. Once a day trade's in profit, you just see it till the end, and it's just managing it. That's one way. Or you could just say, well, actually, once we come to something like an order block, you can take money off the table here if you want, 50%, 30%, 100%, 75%, whatever you want to do. That's how I'd be managing it. It would be sensible to at least take maybe 50% off at this phase, because why? Well, high probability of some sort of a move to the upside. So you take maybe 50% off here, but then use your stop loss to take off the remaining, just in case we do continue to sell off. And that's how I'd manage this one. And the reason I'm saying that now is probably because I think I need to go and make myself a cup of coffee and chill out for a bit. Guys, thanks very much for watching. If you guys like this kind of stuff, by the way, I'll continue to do it. I don't mind doing these kind of day trades and recording them live and doing them on YouTube. Wouldn't mind just working with you, Mayhem, if you're still online, just to kind of figure out how we can tighten up the audio sync so it's a little bit tighter through the YouTube. So Moonrise, you in profit from your day trade? Anyone else on this day trade? Slightly higher. Okay. All right. Okay. Cool. Yeah. Well, swing trades looking really good anyway. On both accounts, I'm quite happy with that. As I say, this is the day trade. What I'm going to do with this is just let this compound and then just reset it every week. So maybe every Monday or something like that, every Friday, I'll just reset it and then I'll build up the account like that then. And try and build it up anyway. But it's nothing clever, guys, by the way. It's nothing clever. It's market structure. It's using direction of travel, areas of interest, at least from a zone perspective. Just making sure that we understand where's a good area to get in, where's not a good area to get in, and then when risk starts to, or things start to change momentum wise, we know how to get out. So okay, cool. Well, look, I'll be back online in this Discord server in a short while. I'm just gonna grab a coffee and something to eat, and I'll catch you guys later. Yep. 100%. Yeah. Absolutely. I mean, look, I'm a simple guy. Ultimately, anyone who wants to come along and help out and has some really good ideas on helping us build is going to be amazing for me. So if